morning, everybody. It's Chris from Serene Education with the Forex Majors notes update for the 3rd of July 2013. Forex Majors morning, starting the euro against US dollar using our FXUltimate8 template indicator. Bottom right. And what happened yesterday? Well, a huge move for most of the pairs against the US dollar. We saw the US dollar posting 7-year highs in construction starts on the housing side, which was great news, and in doing so it pushed the euro, sterling, etc. all to the downside, and you can quite clearly see the bearish engulfing candle now at this consolidator. So we wanted one or two things. We wanted to see a confirmation move down, as I mentioned yesterday. However, what it's done is it's moved into my daily Fib retracement here at the 23.6. The monthly blue Fib retracement here at 38.2 is above price. All our moving average is above price. The only thing in the way now, which is stopping price from moving any further, is this 23.6 here on our daily. So as it stands at the moment now, you can see the RMO and the moving average institution here pretty much concurring with each other in terms of negativity. The R squared, unfortunately, is not coming through or playing game. You can see there still seems to be a bit of hesitation or buying sentiment on these shorter term time frames, and it's primarily because we're trading into this consolidative range here, or the Fib retracement area. You'll notice there's a lot of support through here, and hence the reason why we're seeing this consolidation on our shorter term time frames. But our R squared is complementing the negativity we're seeing on our daily, 4-hour and hourly, which is important because that's showing that sentiment coming through. And if I go to my 4-hour time frame, you can see quite clearly what's happened. We saw price the start yesterday trading into this price support and resistance level high here, but the institution moving average was still stopping price from moving any higher, and then we saw a lot of selling through yesterday, the latter part of yesterday morning going into the US session, and price is now sitting at this Fib level. You can see price failed here on a number of occasions, so it's imperative that we see this area being breached. Once we do that, we're trading into cleaner air. You can see there's a lot more cleaner air. Before there was a lot of hesitation, a lot of consolidation around here, but there's a lot of cleaner air below this 23.6 to our ultimate target, which is down here at 247 pips away. So very important. See indecision the last 8 hours, in particular on the Asian session. Let me just bring this chart so you can see exactly what I'm seeing. You can see doji spinning tops. Okay, the last 8 hours on our 4-hour charts. So the whole of the Asian session price has been very dormant and indecisive, and the reason why it's indecisive is trading at 23.6 Fib retracement. RMO below, it's telling us the trend is negative, swing low, swing low, swing low. 4 hours showing beautiful swing lows on this time frame. The institution in particular is above price, as well as our two shorter term moving averages. So in fact, we're ticking all the boxes. Everything's looking negative at the moment now. The only thing that's impeding price from falling lower is that 1 hour. So I've got my 1 hour chart. Look at this, and you can see that the R squared is positive sentiment or genuine sentiment. However, our parabolic SAR and our MACD is still above the 0. Okay, the RMO, the RSI, ADX, RM, all below price. Okay, that's the one thing now. We just need to get a bearish engulfing candle closed lower than this consolidative range on our hourly, pull the trigger, stop above that, and target near term towards that 127.49 mark to the downside. Sterling, yeah, a lot of negativity, and yesterday's one very important because it was been trading at this consolidated range at the 23.6. I mentioned it was trading below the monthly, the weekly, and into the daily Fib retracement. So there was a lot of hesitation over here. All negative because it was swing low. Our institution above price. Look at the actual indicator box, guys. Very much red, and the R squared is complementing our daily, 4-hour and hourly. The 15 and 30 minutes, not so. But as we go into the European session open, and sterling kicks off just now, and a short time from now, you'll start seeing that volume moving. And because this bearish engulfing candle yesterday is broken, not only below this monthly and the weekly Fib here, you can see it's now formed a swing low, nice juicy bearish engulfing candle on the daily. It's broken below this consolidation here, the support that we saw intraday yesterday at 23.6. Now it's cleaner air to at least this level over here, guys. The prior consolidation area here before we went into the all-time low. This is these lows over here that we saw in May. So as it stands now, where price is trading right now to this level is a good 114 pips and change. So all we're looking for now is an entry. For our candle, we get our sell signal. Straight away our indicator gives us a sell. Why? Because our red arrow candles are all red. We've broken a consolidative range. Price is making swing lows. The only thing now you need to do is look, is your entry, where would you put your stop? How far is my stop and where's my target? Am I doing a risk to reward as 2 to 1 or 1 to 1 in particular? That's all you need to do on this particular pair. Look for an entry. See if there's any news out this morning that might hinder price action, but it's broken a consolidated range. It's got away from this major support and resistance level here in terms of the fibs monthly and the weekly time frames here, this red and blue one, and it's now moving down. The only thing we've got to be aware of, though, if you are going to be trading, we are trading into non-farm payroll this week, today, tomorrow in particular, and Friday. A lot of news, guys, so be aware of that. But as it stands at the moment now, negativity is definitely on the books for sterling. US dollar, Swiss franc. If you're seeing euro and sterling dropping, then you probably find that the US dollar has rallied, and sure enough, we had that yesterday in particular with this particular pair. A lot of indecision candles on the daily into the 50%, and I said quite clearly I wanted to see a break above that, because if it broke above it, then it would confirm that we should be looking upside, moving away from the weekly fib, now heading towards our monthly fib, which was these highs we saw just recently. This is before Bernanke came out with the saying that he was actually going to start tapering the QE3, and we've now seen a bounce, and now US dollar is rallying. So above the 50% on our daily, which is our high from our May to our low in June, and you can see the 20, the 38, now the 50 has been breached. A lot of hesitation here over the past couple of days, but yesterday's bullish engulfing candles taken us above the 50%. Now intraday, this 50% fib retracement area should be our support. RMO, MAs all below price, hence the reason why it's blue. R squared daily 4 hour, and some of our intraday is starting to show that positiveness. So 4 hour, straight away we get a buying signal because everything is positive. Slight consolidation after yesterday's move. However, as long as it stays above the 50%, then it's now prior resistance, new support. Institutions below price now. Before it was acting as resistance. Clearly, sentiment still wants to move higher for the US dollar. Swing high, swing high, swing high. And we've had this breakout. So as long as it stays above 50%, fib on the daily at 94700 if you want to, then look to target the upside. Ideally, you want to see a break of this consolidated range here on the hourly chart. So what you can do is go to your hourly. There we go. Break of this consolidated range at the top here. So wait for this area here at 95,185 to be breached. Enter, stop, and your first target would be up here at the 61.8, which is also our daily. So above this level to the break of that high to that fib level up is a good 47 pips away. So there's enough on there just to take a quick scalp on the market. Remember, a lot of news coming out tomorrow and Friday in particular. You've got to be well aware of it. So if you see any profits out there, take them if you can, because we're going to get into a lot of speculation now as our non-farm payroll figures come out. Okay, so that's the US dollar Swiss franc. Last pair of the day, US dollar Japanese yen. Here again, also showing a lot of positiveness for the US dollar. And the 61.8 on our fib retracement from the current highs that we saw in May of this year to the current low that we saw just recently in June. Price has also bounced, getting back above the weekly fibs, in particular the 23.6 here, the red line, heading into our long-term fib retracement. It was trading into our long-term fib here, the monthly, at the 50%, which was at 100, which is also the 61.8 on our daily. So we had a lot of resistance here. Quite clearly see prior resistance, little support, resistance level yet again, and now we saw price hesitating going into it. But yesterday's momentum on the US market has carried it well above, and we've seen a nice juicy daily candle close higher. Now as it stands at the moment now, we would be targeting the next level, which would be our 78.6 mark, which is 71 pips away for this particular pair on the daily. Get above that, then we're heading to those highs we saw recently back in May of this year. Notice the indicator box, very much positive. RMO, blue, strong trend. Institution moving average, below price, acting as a strong trend. R squared, pretty much on each pair. One or two of them that haven't come to the market, but overall, there's more buying sentiment. RMO above, MACD clearly above, and you can see the massive move to the upside. So 4-hour chart should get a buying signal, which we do get. Look at that. We're seeing a little bit of consolidation on the 4-hour, but wait for break on the hourly above this consolidation high here. There we go. And then, depending on how much that hourly moves, then look to gain entry and then target, as I said, the upside towards that 61.8. Or sorry, the 78.6 mark on our daily, which is a good 68 pips away and change. So as it stands now, buying sentiment to the upside for this particular pair. Okay, That's it, short and sweet, to the point. Back it up with some money management, guys. Be aware of the news, non-farm payroll this week. Any profits you see, take them and run. Okay, enter, stop, and target straight away. Got to be very aggressive. You don't want to be trading live accounts if you have to when non-farm payroll is out. But as with the US dollar positiveness we've seen recently and the growth that we're seeing, and especially the news out yesterday with construction figures being at a 7-year high, all looking good for the US dollar. So are we going to see the same thing for non-farm payroll? Are we going to see fantastic employment figures and really great unemployment figures to complement that going from tomorrow onwards? It'll be there to be seen. We've got to wait. We can't speculate. Just rather wait and see what the price, how it comes out, and then we can trade it. But as it stands now, the US dollar is showing a lot of growth, which is good for long term. Okay. Other than that, have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, trade serenely.